MCK, the channel for learning about trading and investing. Welcome to Markets Tomorrow's daily market analysis show, where we look at what happened in the markets during the day and how we can plan for the next trade. So today was absolute consolidation, amidst a lot of uncertainty. Let's get into the charts without wasting time and see what happens. So as usual, we will be doing our pre-market for February 22nd, Tuesday 2022, based on all of these parameters that you see on the charts. Right? And we'll have additional data analysis, we'll have some actionables, and try to wrap up also. So look at the candle, it's a doji candle. It's very small body candle. Indices in this sense, look at the wick size. Right? It's almost like a spinning top, almost, but not exactly. It's a small body indices candle. Here also you can see the wick size that indicates the volatility of the markets. That happened. Just V-shape, inverted V-shape kind of moves that happen in trading. Right. So it's 69 points lost in point. That's around 0.40. Small body indices. This is what happened in the Nifty. Bank Nifty, it's like 86 points lost. And it closed green also. 86 points gained actually. Right? It closed green, Bank Nifty. Right? Slightly. But it was showing strength, the Bank Nifty. But so both of them, closed below the 20-day moving average. 20-day moving average. Intraday, you can see that V-shape and inverted V-shape move is what happened, and that's within a 300-point range. Right? Both of that happened. Right? And Bank Nifty, it was. Bank Nifty, what happened is, like, for example, 1% up, then more 2.5% down, then 1% up, and then again down. So it was horribly volatile market that happened. If you see the intraday, this is the price action you can see. That's what is happening since it's a fourth day that is happening. Right? Down, up, down, down, up, down, down, up. So that's the same thing that happened today. Also it happened down, up, and then down. So that's the same thing that happened in Bank Nifty, also down, up, and down. So that's the kind of volatility that is in the market. Both the bands are saying that the volatility contraction has further increased. The close happened below the median, that increased some bearish bias. Bearish bias, sideways momentum, volatility contraction is happening. Support resistance levels, 17,400 is the first resistance upside, then 17,500, 17,600 that level, Fibonacci 23 level. Above that, 17,800, 850 levels. Similarly, below support would be 17,200, 300 that range, then 17,000 range, and then below that 16,800, 1,600, Fibonacci 38 level. And below that, you have 16,700, 16,750 that level. So that's support resistance of the Nifty. Similarly, Bank Nifty, if you see, current support can be seen as 17,500 level, Fibonacci 23 level. And the first resistance will come at 37,800 at level, and above that you have 38,000 level resistance, and then above that you have 38,500 level resistance, and then 39,000 kind of levels. Similarly, below you have the previous supports that will act as the previous that will act as support zones. So you can see 36,800 is Fibonacci, 38 is a good support. Then 35,000 comes in as good support. Below that you have 35,200, Fibonacci 50 that's coming, that's also support. So right, it is consolidating within the support and resistance levels that we can clearly see that, making out of these levels that is mentioned here, right? And then before taking positions, momentum levels, if you see, it is still sideways. Short term and medium term it is sideways. You can see that momentum is hovering in the same place, nothing happening, no divergency. Trend indications still bearish on both Nifty and Bank, right? But the strength of the bearishness is weak. It's not having incremental strength. So it's bearish trend across on both the indices, and the momentum sideways. See, already again for the short up, it's very high level, 21.44, 22.9 is what it closed. 3.3% increase happened. Implied volatility is 21.4, 83.7 is implied volatility percentage, which is also very high. India VIX is above 20, so we have to be very cautious, as I always say. Right? So VIX is spiking up. Be careful. So fundamental data analysis is showing that it's equal strength for the bulls and the bears. You can see more or less as of now. There's still many days out there for the monthly expiry to happen. Highest put rating is seen at 70,000. Then highest call rating is seen at 18,000. So that's a range, 1,000 point range. So 16,000 also has got good puts, and 7,500 also has got good number of calls. 0.97 is near to bullishness that you can see. Features of industries, Nifty is showing it's a short build-up that happened, obviously. Bank Nifty is showing a long build-up that making out of that, and the PCR or the put call ratio is also bullish. Bank Nifty is more bullish. 37,000 is maximum put rating, 39,000 is the maximum call rating. That's the range. So that is 1,500 and 4,000, 40,000 also has got good support and resistance respectively for the Bank Nifty. So that's the open interest data. Making note of these levels, correlate them with the chart support and resistance levels, and you get an idea where you have to enter, exit, stop loss, and all of this. So this is the heat map, right? Three major heavyweights worked well. In free, HDFC Bank, ICICI Bank, all of them is doing good. Did well. Individual stocks. A lot of red is also there from the ITCC side due to some reason. Reliance also did not do well. So that's why market could not hold the levels of the advantage that we got from the three big moves that happened. It didn't sustain. Overall sector wise, if you see, only telecom performed. All other sectors were in red. Let's see the index aggregate how it performed. HDFC Bank did well. All the banks did well generally. So HDFC also is moving up. HDFC Bank is moving up, and again the resistance, famous resistance, long-term resistance is still there. Only after it moves above that, you can say anything concrete about that. Then we have the Reliance which faced resistance in the channel top and seems like it is heading down. It's a bearishness that has appeared now. It is having the momentum resistance. It's not about having enough momentum to move further up from this neckline point of the cup and handle. Infosys is consolidating as usual, but green consolidation is what happened today. It did well. ICICI Bank also is showing green. Momentum is sideways. Okay. And Kodak Band is showing green at a support zone, trying to climb up and hit the next two major supports on the upside. Similar TCS also is showing a red, but it has not gone out of the channel yet. Okay. So it is well within the channel, but momentum is sideways. It was bearish basically. TCS. Sector-wise, if you see, IT was flat, metal was 2% down, auto 0.5% down, pharma 1.5% down, nearly 1% FMCG down, realty 1.5% down. So the momentum is bearish for pharma and bearish for reality on the short-term daily candles. Other sectors are all having sideways momentum. IT, metal, auto, and FMCG is all having sideways momentum. So sideways are bearish. Stay away from it until it shows some bullishness in the momentum for a sectorial top-down approach-based stock picks. Institutional participation data has not come in yet. Just quickly validate whether the data is available now or not. It will be interesting to see what happened today. No, data is still not available. So what you see here is institutions as usual has been, Fyers has been selling and IDAs has been buying. That's the same that might have happened. That is not out yet. So dollar index right side, if we can see that it is slightly reduced. It's kind of consolidating since several months. It's not ready to move further up and break out. Right, already it's at high level and consolidation at the high level is happening. But USD INR currency pair, you can see that it met the resistance and dropped. So rupee has strengthened. The momentum breakout may not happen. It has strengthened and then cooled off below the 75 is a good thing. Crude also slightly cooled off, but still at the top level near to 90. Slight cool off happened, but nowhere enough to what is required. It can still go up and shoot because the momentum is still very high. Gold back to the resistance and then you can see a red, but the momentum is very high. There is a high, every possibility it can break out this 1970 level and then there will be a big move in the gold. Global indices, you can see that there is Dow Jones are showing some indecisiveness candle sideways momentum, but the base is not broken. Big support where it hit several times, it's still intact. No worries there. Sideways momentum for the Nasdaq and S&P 500 both, but all are on the edge of the trendline channel. So it's also kind of a support. If that breaks and goes below, then we have a problem. There are support zones here on the all the. So it's basically facing resistance in this uncertainty is what US markets are trying. Actionable one short trade for the UPL. Right, it's a cup and handle. So this candle may extend further. If this breaks down below this 700 region where it is a major support, if that breaks down, then it can give a swing. The momentum is bearish. The trend is also bearish. Volumes are very thin, so there is a chance that you can get a swing short trade on this. Now wrap up is that it's a neutral basically because the market is sideways, but there is a mild bearish bias as the Bollinger Bands are indicating, chart patterns are indicating the support resistance. Bearish trend is the support resistance sideways. So overall, neutral to the mild bearish bias. This market's uncertainty, red resistance is there. You need to be cautious. War cry is happening, uncertainty is there. So markets are very volatile since last 4 or 5 days just because of that reason. Volatility is greater than 20. Stay away from it if possible. Otherwise, fully hedged risk-refined positions. FIS continue to sell. That's also worrying. Only good thing is that still the market is not ready to break down big, just like just because the mother market is out. It's just holding on and waiting, and uncertainty is there. It's highly volatile, but well within a range. That's what the thing is. So, which is cooling off below 20 means we are in safe mode. Otherwise, you have to be cautious. Always use this band only when you use risk-refined strategies so that Intraday I have tried stop losses. Always do that. Is what option setups is what we have to do. Okay, thanks. So the other piece is neutral, mild, bearish. So if it helps you to frame your view and your trade plan, then consider hitting the like button and share. We have very few subscriptions, so and your help in this regard will be appreciated. Thanks. Happy trading. Happy learning. Bye.